be a very, very exciting theory class. What I know for advanced financial reporting, however good you are in terms of number crunching, you're crunching, so much in terms of computations. If you're not good in AFR theory, you shall repeat this paper. And I'll tell you why you need to be really good in this paper. The paper that I will be doing, let me just show you how we shall be passing this thing in round. I don't believe in politics. Nothing good comes out of politics. But just to borrow a terminology from them, this paper, it's one term, and we move on to other things. It's one term. It's one term. So we shall do 10 theory questions from your past papers. So 5. So today we do only 5. All right. So here is the paper that I'm sharing with you. AFRA 2, I've called it AFRA 2. AFRA 2. So kindly confirm once you are able to see the paper and download it. And I hereby share it with you on my screen for purpose of discussing. Yeah. So we are told November 2019, question number 1. November 2019, question number 1. Explain the steps that are followed in the process of setting International Financial Reporting Standards, IFRSs. Ladies and gentlemen, there is no an answer that is cast on stone regarding this. Whenever it comes to coming up with an IFRS, the most important thing is for you to remember that we have what we call the IASB board. Yeah, International Accounting Standards Board. That is the one that is charged with the responsibility of setting standards. The board has got 14 members in total as directors. They're called council members, but you guys are used to directors. All right? So the very first thing, whenever they are thinking of coming up with an IFRS, it could be, for example, an IFRS capturing financial reporting in insurance. So then first of all, they identify the need. Do we really need this IFRS? When they identify the need, they'll be able straight away, remember, IFRSs are normally, ladies and gentlemen, obtained through a lot of public participation. Through public participation. Once you mention in this case here public participation, that this ISB will be able to get across all these jurisdictions and talk to, for example, members of ISPAC, members of ACCA, a lot. So they identify the need. Of course, this being a project, they must have a technical committee running with this ball, all right? Technical committee, first of all, before even they start involving anybody, they must do a lot of research themselves. Yeah, they do a lot of research. And then, of course, they are able to post something on their website, what we call an exposure draft. This exposure draft ED, they'll be able to call now upon members of this great profession of accountants to give feedback. So they take that feedback, they analyze, they use it to tweak what they have in the exposure draft. And then, of course, at the end of the day, they publish, in this case here, what would be called like the final draft. So this final draft, again, will be taken to the public. The public will have their say again. I mean, are there things we can add here and there? So we'll have this technical committee of the ISB looking at, again, the feedback, which they even analyze further. So the most important thing is you to remember that we want to come up with an IFRS on a new area, or even change the one that we have. Then there must be a need. Have a technical team. Technical team will do a lot of research. This research will lead to what we call publication of an exposure, exposure draft. Let me read the answer that we have here. All right. So we are told to identify and review the issues ISB identifies the topic needing standardization based on global relevance, complexity, stakeholder request. Then we have research and consultation. Gather data from academic studies, industry practice, economic analysis, and engage advisory groups. Study national and regional requirements. Like now, these, of course, people cannot remember this. It's just about doing lots of studying, lots of research. Publish a discussions paper, what we also call an exposure draft. Yeah, outline issues and invite public comment to gauge initial reactions. Yeah, develop and issue an exposure draft. I mean, I told you there is no one way of writing this answer. You won't get like discussion paper and then no. Once you are here, you've done your research, basically talk about what here, an exposure draft being issued. Yeah, present detailed proposals for a new or amended standard for public consultation. So we have conduct roundtables, webinars, so they go through multiple rounds. Voting and approval, at least 8 of the 14, at least 8 of the 14 board members must approve the final standard. All right. Publication of final IFRS includes the standard basis for conclusions and implementation guidance. And then we have the post-implementation review. After we've implemented, they normally look at these existing standards, reviewing them every 2 to 3 years to assess how effective they are. Ladies and gentlemen, should they bring us this kind of a question, do you think now you are at a position of answering it pretty well? Are you in a position of answering it pretty well now? Yeah, the steps. Yeah, great. Thank you so much. Thank you so much. Then we go to the next question. The next question, they want us to summarize 5 reasons why reporting entities would prefer to adopt IFRSs. Remember, IFRSs, ladies and gentlemen, right now they have been adopted by about 3/4 of the countries globally. Actually, where we are still getting a lot of resistance to IFRSs, it's in America, it's in China. Yeah, like America, they're so huge with the US GAAP. The US GAAP is now really grown. They don't feel like they should change it. Yeah, so why would we want reporting entities preferring these IFRSs? Because already they have been adopted in many countries. So, and there is no way or good reason for you to have like one of your holding entities, for example, is in Kenya, adopting IFRSs. Another one, for example, adopting some local standards in Sweden. Yeah, that makes it very, very hard to compare performance of your entities. So, enhanced comparability. Enable investors to compare companies across borders. Access to global capital markets. Most of these global capital markets, including our Nairobi Stock Exchange here, the demand companies to do their financial reporting using IFRS framework. Yeah, if you are going for mergers, a merger between one and another company there, or rather a merger between 2 companies there, or even more companies, they would always, ladies and gentlemen, insist that you use the same financial framework. And most likely, this common financial framework will be the IFRS, simplifies cross-border valuation. Then compliance with stock exchange requirements. Yeah, efficiency for multinationals, reduces complexity of preparing multiple financial statements in different versions. Support for regional integration helps economic blocs standardize reporting like the European Union. Improve credibility. Of course, any company that is reporting on IFRS will be seen to be more credible. High quality disclosures enhance investor confidence. So whenever they ask about advantages of taking up this IFRS route of financial reporting, please don't forget to mention a few advantages here, a few reasons here. Yeah, in this case here, the biggest, of course, will be, compliance. Compliance with these stock exchanges, all right? Comparability, all right? The credibility of the institution that is being, ladies and gentlemen, in this case here, that is using IFRS will be up there, all right? The concept of getting capital. from global markets. That will automatically push you to using this IFRS. So I hope with that, you'll be able to get like 3 points. They don't normally ask for very many points. 3 points. 3 points are enough. Ladies and gentlemen, from there, we are told to identify 5 challenges that reporting entities are likely to encounter while implementing IFRS. So, ladies and gentlemen, these reporting entities, while implementing IFRS, what challenges will they be encountering? Number one, lack of expertise. There are not many accountants who understand these IFRSs back to back. Yeah. In this case here, then we have another biggest challenge in implementing these IFRSs is the conflict between IFRS and the local standards. So you're in a country like, for example, Sweden, they have their local standards. All right. So at times in this case, you want to apply this IFRS, the number you get when you apply this standard, maybe you are doing goodwill. It gives you 20 million. When you use your local standard, it gives you 10. So there will be that conflict. Very, very important for you to appreciate that. All right. Then there are issues to do with even translations. Because remember, IFRS is written in English. All right. And some of these people would want to adopt them like in China, they're using Chinese language, all right? And then, of course, ladies and gentlemen, implementing IFRS is quite an expensive framework. Why? Because you need top-notch accountants. It's not easy. You have to engage in, on and off trainings of your staff. And remember, like the US GAAP, IFRS, they keep on, in this case here, changing. Like now we are in the process of bringing what we call IFRS 18 to replace our famous IAS 1, presentation of financial statements. So now you can imagine the investment you have done preparing your people in terms of IAS 1. You have systems, you have in this case your SAPs. You had already tweaked them to be reporting using IAS 1. And here they're changing. Most of these democracies that are using their own financial reporting frameworks, you realize that they are quite stable. They rarely keep on changing. Yeah, we're just discussing here on our second question, I think. Yeah. So we have here identified 5 challenges that reporting entities are likely to encounter while implementing IFRSs, conflicts between IFRS and national laws, regulations. High cost of training systems changes and restatements. Technical complexity requiring specialized expertise. Misalignment with tax rules. Yeah, causing dual reporting. Translation difficulties, creating ambiguity. Resistance to change from stakeholders. So mine is to simply ask you a question, whether you've been able to pick a few points that you'll be able to use in your exams. Have you been able to pick a few concepts here and there? IFRSs can be very, very challenging. Like, for example, they introduced IFRS 17 for insurance reporting. I'm telling you, even the seasoned accountants up to date, they have a problem with that IFRS, understanding it, ambiguity. They're very ambiguous. Explain 3 objectives of integrated reporting. To integrate is to put together. You're putting together quantitative information and a qualitative information. So when you talk of objectives of integrated reporting, ladies and gentlemen, don't forget the concept of the fusion. Yeah, would want in this case here integrated thinking, where we have, ladies and gentlemen, quantitative information being fused with qualitative here. Yeah, so explain 3 objectives of integrated reporting, provide a holistic view of value creation. Yeah, shows how the organization creates value over short, medium, and long term. Please don't forget this first point. Holistic view of value creation. Improves capital allocation decisions. Yeah, remember, we have those 6 capitals. Do you remember the 6 capitals of integrated reporting that you must always show? Anybody who is able to remember those 6 capitals, please type them. I can help you with 1, manufactured capital. Type them. The 6 capitals. Under integrated reporting, what do we have there? Yeah, human capital. Thank you so much, Mildred. Cynthia, thank you. The 6 capitals. We have financial capital. We have the natural resources capital, yes. Intellectual capital, I like that. Then, of course, there must be something to do with social capital. I'm surprised. Social capital. Because remember, a company is a social being. Just like ourselves. Ladies and gentlemen, as much as we are doing very well academically, even financially, if we don't have what we call social stroke relationship capital, I'm telling you, you can never get anywhere. If you're that kind of a person, in this case here, whenever you're pricked a little bit, just somebody comes and says, Mildred or even Nekoye, yeah, this girl is bad. And then you hate that person forever. Yeah, so then you have a low emotional intelligence quotient. Your social relationship capital is not very, very good. So in that case, here as a company, you will not be able to do very, very well. All right. As a company, of course, we must live with the fact that for us to exist, we need our human beings who are close by to give us business, to work for us. So under social capital, we must do a lot of CSR. To grow our social capital, we must do a lot of CSR. Great. So improved capital allocation decisions gives investors decision useful information, promotes integrated thinking, encourage management to connect financial and non-financial performance, enhance accountability, stewardship over multiple capitals, financial, human, natural, etc. Enhance accountability. Ladies and gentlemen, remember, whenever you're doing an integrated report, you must always have what we call management discussions and analysis. So these management discussions and analysis, which are discussions of top-notch, top-level management, makes them accountable. They're basically, in this case here, responding to the numbers. They're telling us these numbers grew by this, and this is what we did. So enhanced accountability, stewardship over multiple capitals, like that. And then remember, when it is integrated reporting, because of this non-financial, it shall support what we call long-term sustainability. Long-term sustainability, focus on strategic longevity, not just short-term results. Remember, initially, we used to have what we call financial statements only being published. Only financial statements being published. And then people sat down and said, no, let's have what we call annual reports. Annual reports now are the ones which are prepared using integrated reporting. So under annual reports, then you give us all the financial statements, including the notes to the accounts, and then it doesn't stop there. You must go ahead and report on what we call the 3 Ps model. You must go ahead and report on the three Ps model. So tell us what is happening to your people. Are you giving your people good salaries? Are you, in this case, you're training your people for the future? All right. Are you having some secondary schools, primary schools around here where your people, in this case, here can be taking their children to? Are you supporting people here? How strong are you with that? Like breweries is so strong on that. And then, yes, we have the planet, as Mildred is telling us there. So planet, we are basically looking at what are we doing to our environment? Remember this environment, like every day when you read about ozone layer, like now our ozone layer really is not doing very well. It's being depleted. Yeah, because of what we call global warming, all right? So you as an entity that is consuming resources out of this environment, what are you doing, for example, in terms of planting trees? Like when I was reading the other day, Equity Bank's annual reports, integrated report, I mean, these guys are saying that now, last year they were able to plant 1 million trees. Yeah, 1 million trees. Remember, we also have what we call a green conmanship. So green conmanship, and you may be asked a question regarding that, is where an entity comes and says, I'm not saying that they have done that themselves, an entity comes and says, hey, we have planted this number of trees, but is there somebody who is auditing that? So like in Kenya, the way we keep on talking about carbons, whatever, our president is talking about this green, these environmental issues, it's high time we have a regulator, which basically when you come and report, because when you say you've planted 1 million trees, for sure, you'll be able to endear yourself to some consumers outside. They will be able to buy or use your services simply because you're trying to show how good you are to the environment. Now, for that, then to be effective, we may need a regulator, and perhaps that regulator to be given to some of us to manage, and we shall be able to do very well. We shall overcome. So supports long-term sustainability, focus on strategic longevity, not just short-term results, not just short-term. Remember financial statements that were initially being prepared? You know, financial statements basically belong to the shareholders. And the shareholders would want increased profits every time, increased profits every time. So for us to increase profits, what do we do? In this case here, for example, if we want to increase our profits, then let's, in this case here, not pay our workers very well. You see, that is short term. You save the workers, you save the workers' wages. You are happy you pay this year's dividends very well to the shareholders. But how about the long term? So supports long-term sustainability. So whenever we talk of this, I've always seen them giving us a question on this, and very few students are able to answer this very, very well. They normally ask for about 3 or 4 points. Yeah, they'll ask you for objectives or advantages of adopting integrated reporting framework. So holistic view. You see, like for example, the balance scorecard. Yeah, balance scorecard. So you are able to see in this case here, like financial perspective, you're able to see the customers. So, you know, that's a holistic view. Then we have the other advantages. I mean, seeing this farm today, tomorrow, and in the long term. All right. Yeah. So in this case here, they are very, very keen on capital allocation, resource allocation through the 6 capitals, if you remember, like that. Then we have the concept of integrated thinking, and because of the management discussions and analysis, accountability, long-termism, very, very important. That is the language I would expect to be seeing from you, my great students, come this date, only be doing your exams, Who has this document? Somebody should be able to reshare it. Yeah, thank you so much, Mildred. Thank you so much. I can see it has been shared there. So I believe somebody will be able to pick it. Yeah. So can I go to the next question, my good students? Can I go to the next question, my good students? Yeah, thank you so much. So then if you allow me, wow, how comes you've never called me boy, Evelyn? Yeah, thanks, girl. Thanks, boy. We shall overcome. Don't worry. So May 2019, question number 2. May 2019, question number 2. May 2019, question number 2. Yeah. I mean, who would not want to feel young? Would want to feel young, all of us. Great. So discuss 3 implementation challenges that are faced by ISB in its push towards a successful move to IFRSs. Why is it that we have resistance to change? Why is it that, ladies and gentlemen, America, China, even Japan, why have they refused to board this ISB journey towards having a uniform financial reporting framework in the whole world? Yeah, you can see different legal systems, national laws may conflict with IFRS requirements. There is no global enforcement. ISB cannot compel adoption. It depends on voluntary compliance. Translation and interpretation issues, language differences may cause misapplication. Established local gap. Mature systems like the US gap resist replacement. Discuss 3 implementation challenges that are faced by the ISB in its push towards a successful move to IFRSs. So here I'm able to see different legal systems. I'm able to see different legal systems as I close my eyes. So we have the Kenyan legal system, American legal system, they are different. Like in the US, why they are really refusing these IFRSs. You know, IFRS, when you do your profit, still you'd want the taxman to, I mean, the profit, financial reporting profit is different from taxable profit. Americans don't want that. The US gap in this case, at the moment you produce your financial reporting profit, that will be the country's tax. I mean, they'll just levy like 30%. A different legal system. There is no global police force, no global enforcement. ISB cannot compel adoption, depends on voluntary compliance, translation, and interpretation issues because of different languages, China, Japan, etc. Established local gap, mature systems like US gap, resist replacement. All right. All right. Perceived complexity, yes, they are taken to be very, very complicated, and even the cost of hiring accountants. IFRS seen as technical, requiring specialist skills. Economic differences, standards may suit different developed markets more than emerging economies. Give 2 reasons why there is need to develop a set of IFRSs specifically for SMEs. Remember, you've got full IFRS and SME IFRS. SME IFRS is quite simplified, eh? Yeah, quite simplified. Because like RCM is an SME. So if you're an SME, where would you want to put us on the same financial reporting framework with, for example, Safaricom? Safaricom can afford 100 accountants. Safaricom has got sophisticated SAPs. We don't have that. So you can see a cost benefit. Full IFRS compliance is expensive for SMEs relative to the user needs. Complexity. IFRS requirements are detailed and technical, making compliance difficult. Most of the SMEs can't even hire even 2 accountants. Lower public account, of course, we don't have that public accountability apart from our taxes. Lower public accountability, SMEs have fewer public stakeholders. Focus on relevant information. Users of SMEs accounts prioritize liquidity, solvency, and cash flows. Yeah. Why would you want us to calculate EPS honestly as an SME? Why would you want us to adopt IFRS, in this case here for financial instruments, hedging? And yet perhaps that is not something we may ever see in our lifespan. So discuss 2 reasons. You'll be able to remember that SMEs, we don't have enough resources, would want, in this case here, a smaller version of IFRS. Yeah, we don't have enough resources. Yeah, so it's quite costly for us. They're very, very complicated. And in this case, you would want really some smaller IFRS where we are able to focus here, focus on relevant information. Then with your permission, ladies and gentlemen, I'll be able to go to May 2018. May 2018. May 2018, question number 3. May 2018, question number 3. Describe 4 social indicators that might be reported under the social dimension in this global reporting initiative, sustainability reporting. Remember, GRI is Global Reporting Initiative. Yeah, Global Reporting Initiative - Sustainability Reporting. So remember, the social dimension is the people dimension. Social dimension, I repeat, is the people dimension. So in talk of people dimension, I'm looking at employees and other stakeholders out there, our nearby community. So then what we would expect you to report, it will be wages and the benefits. What is the minimum wage ratio? Yeah, health insurance for your people. Would you want your people, in this case here, after retiring, they should be among the very poorest outside there, the pensions? No. So you must report on this. Wages and benefits. Then are you training them? Training and education, hours of training, budgets for development. Then are you allowing your employees to be members of COTU, to be under Mr. Atwoli? Union membership rates, grievance procedures. This union is really, really very important because you want these people to always have, whenever they have issues to raise, they should be able to have like a framework that they will use to relay the information. Workplace health and safety, injury rates, absenteeism, safety investment, employee retention, turnover rates, reasons for leaving, community engagement, community projects funded, volunteering, hours, etc. Describe any 4, like the ones I will never forget, ladies and gentlemen. I must be good to my employees in terms of salaries. At the very minimum, our employees should earn over 35% of the revenue that we're generating. Yeah, over 35%. Yeah. Then, of course, you have you need insurance for them, good pension schemes. Then you must be training them. Then we have in this case here, this workplace healthy and safety. If we are having some construction, are they wearing helmets? If we have some motorcycles, do they have motorcycle driving gear? Yeah, I will always remember the concept of employee retention because social dimension is about mostly our people, So, ladies and gentlemen, with your permission, I will be able to go to the next question, which is part B under May 2018. Now, this question are very many. I thought should be ending now. They should be ending now because we have less than 10 minutes. Highlight 4 characteristics of a government business enterprise. Could you kindly give me an example of Kenya's government business enterprise? Kenya is doing some businesses. Kenya government is doing some businesses. Whenever they have an enterprise, there has an objective, a profit objective, profit motive. It's called a GBE, government business enterprise. Give me one company which belongs fully to the state, and it's doing business, it's making profits. I can give you one as you think of yours, because you are typing, it may take you some time. Kenya Airports Authority, they report on IFRS. KPLC, KPA, Kenya Power. But Kenya Power, in this case, ladies and gentlemen, has really been taken up by what year? By private investors. Yeah, they have been able to release some shares to private investors. Yeah. Yeah, like Kenya Railways, those are government business, even if they're making losses, but they would want them to be run profitably so that they don't depend on the exchequer. Great, great. Thank you so much. You guys have an idea. You're good students. Great. So then highlight 4 characteristics of a government business enterprise. So if it's a government business enterprise, when you want to contract, you don't have to go to the president, because you have a separate legal entity. So you contract on your own name. Operational autonomy. Yeah, that's why we even appoint a board for you. We take, in this case, this person, we put in the board. So operational autonomy manages activities independently. Commercial orientation, they sell goods or services for profit or cost recovery. Financial independence, not reliance on continuing government funding. Public sector control, they are ultimately owned by the state. They are owned by the state. The state should be having more than 50% of the shares. The state must be the parent. So, ladies and gentlemen, out of this, I hope you'll be able to remember a few points. Yeah, a few points here. Separate legal entity. Operational autonomy. Commercial orientation. Financial independence, you don't check on the exchequer all the time. Like KNEC is a government business entity. KNEC, for the longest time ever, they always declare profits. You will never get KNEC in this case here going back to government. Never. They're even running now a foundation that is giving students loans. You can imagine that is how powerful KNEC is. Why can't you clap for KNEC? I mean, there are not many government enterprises that will be able to do what KNEC is doing. Yeah, let's give them their flowers. I think KNEC, they are doing very well. Let's give them their flowers. How comes those flowers for KNEC are not coming? How comes they're not coming? The flowers for KNEC, how comes they're not coming? They would clap for them. Yeah, all it takes. Somebody saying it takes. That's our money. But I mean, ladies and gentlemen, there are so many government business enterprises that are getting a lot of money outside there, but they still, because of misappropriation, they've got nothing to show for the same. So I think from that front, KNEC has done a very, very good job, if you ask me. Discuss 2 challenges in applying ISB conceptual framework. Then we have a conceptual framework. Conceptual framework. Yeah. So what is the challenge here? Yeah. Same like the IFRS framework. Like, for example, here we have multiple user needs, hard to meet varied information demands with one framework. Yeah, for example, like now KRA can't really depend so much on this framework. They still have to invest in their own systems here to be able to get what we call taxable profits here. Interpretation differences, different understandings by preparers, auditors, regulators, changing environments. Concept may lag behind evolving business models. There is no global police force really to enforce this. No global enforcement. Adoption depends on national bodies' goodwill. D, highlight 4 disclosures required when an entity elects not to comply with an IFRS in rare cases. There are those entities that will say, hey, we are not complying with IFRS. Then you have to tell us, you are not complying with this IFRS number, this. Why? Give us the nature of the departure. Why do you want to depart? Give us reasons. Reason compliance would be misleading. Why do you want? You're telling us that if you comply, then whatever results we'll get, they'll be misleading. Give us those reasons. Show us in the notes to the accounts the alternative treatment applied for us to assess. Alternative treatment applied. Then we have the impact on the financial statement. You must tell us if I apply this IFRS, I'll get this profit. If I don't apply this IFRS, I'm using this alternative method, I'm getting this impact on the financial statements. So that if the difference is material, then we'll ask you to change. Confirmation of compliance with other IFRSs. So confirmation regarding whatever you've been able to comply with the other IFRSs. It's only these 1, 2, 3 that have not been able to comply because of this and this. You must give us the nature of the departure. You must give us reasons why compliance would be misleading. You must tell us the alternative method you have used, impact on financial statements, confirmation of compliance with other IFRS. So, ladies and gentlemen, it has been a pleasure hosting you. I have another class that will be starting in a few minutes. I would want to have a break. So cheers. See you later. Great. Thank you. Thank you, 𝗦𝗘𝗣𝗧𝗘𝗠𝗕𝗥. Next, great. Cheers. I hope you've been able to enjoy this. By the time we do another 5 questions, then you will be good to go. Thank you so much. Yeah, I'm not a boy. I'm a chief ninja. Yes, CPA chief ninja. Bye.